Finding the right lender can be one of the most challenging and interesting things in the world. There are so many lenders out there, each with their own ways of getting money, and many of them charge exorbitant interest rates. So how do you find the lender that's right for you? It's not always about looking for the cheapest rates or cheapest services, although this is important. Sometimes it is about finding the best loans that fit your financial situation. One thing you want to think about is the type of mortgage that you qualify for. Mortgage loans come in many different forms, depending on whether you have a property to mortgage, your personal circumstances, and whether or not you are going to be putting any down. One of the first things you should consider is whether or not you can get a perfect loan, or one that will enable you to make your payments on time. You don't want to have a mortgage that is too high on your monthly payments. This can reduce the amount of money that you get at the end of the month. If you get a loan that is too low, then you might not be able to get yourself out of debt. Of course, this is something that only you can decide, but you need to make sure that you don't get caught in a situation where you owe more than you can repay. You might also want to consider other options that you have. If you are an employee that doesn't earn enough to repay the loan over the course of your whole contract, you could consider whether you can transfer your contract into an alternative form of employment. A loan that is based on a rate of interest is not something that will always help you manage your money. Some lenders offer very good deals on loans that are based on percentages of the property. You can benefit from a loan that gives you the balance of the amount owed rather than the interest. These loans can be very useful if you have a long-term loan or an ongoing mortgage. In these cases, a fixed-rate loan might be the best way to go. You can find this type of loan with variable rates, sometimes called the utility rate. A fixed-rate loan is always going to be higher than a variable-rate loan. Some people prefer a fixed rate because they have built up an income or have good credit. Another great place to look for a loan is on the internet. Most lenders have their own websites where you can check them out and then compare the various deals that are available. Now, you might be wondering what would be a best deal for you? The real key is that you want to be certain that you can afford the repayments and that you can get the best loan that you can. If you are flexible with your repayment periods and you have good credit and are over 65, you might be able to get a better deal through a second mortgage loan. Make sure that you follow the rules and regulations as laid down by the bank and that you do everything in your power to make sure that you are paying off the loan as soon as possible.